Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Tuesday. August is upon us. I hope it finds you well. Last night, a big update from the U.S. Treasury. And I'll say this. It's bad news today. It's going to be really good news, unfortunately, for gold and silver after today. We'll tell you all about it. Let's just say this. We're going to be upping our debt forecast for the federal government. Plus, we'll give you an update on the Federal Reserve and all the money they're losing. You know, the Federal, it's a bank. And kind of like all these banks that are having problems with these higher rates, well, the same thing happens with the Federal Reserve. Remember, they're rolling stuff off of their balance sheet. They're taking huge losses. But, you know, I got to give them credit. They are better than any mob organization ever, because it's okay for them to take losses. They just like, well, we'll deal with it later. Unfortunately, the Federal Reserve for the last, going back to the financial crisis when they blew up their balance sheet, they would make money on bonds and turn it over to the federal government. To the tune at one point, I think the highest level was right before COVID, over almost $120 billion that they got to use to offset the debt. That number is now going to be $0, right? So we got a lot to talk about as the Treasury overnight came out and said we need to borrow a lot more money. 10-year note spiking. We're approaching the highest levels now in 22 years. We're going to tell you all about it. Here's the great thing. It's going to give you a great buying opportunity just because, right, this is a quote-unquote dollar strength day. Of course, we really know what it really is, right? It's a dollar weakness day. But because they have to do all this hundreds of billions of dollars of more issuance, it is driving rates up. And again, we warned you about this anyway. This was going to happen anyway, starting in August, as we warned. Now, guess what? It's even worse than that. 800-951-0592, the website at allamericangold.com. And Jason, the Treasury announced, as we got a debt now, remember I told you by the end of August we were going to be at $33 trillion. By the end of the year, $34 trillion. Get rid of those numbers. Those numbers are now in the garbage. As the Treasury said for the third quarter. Now, here's the thing. July's over. The U.S. Treasury will need to fund the second largest amount of debt ever. Now, you go back. Think about things like the financial crisis. Think about COVID, when they shut everything down. And literally only one quarter did we have to borrow more than what we're going to have to borrow in this quarter. I'm worried about the fourth quarter, right? We don't even know about that. But, Jason, we're going to borrow over $1 trillion in this quarter, which is already a third over. The Treasury came out and said that they're going to need to borrow an additional $250+ billion above what they expected in the final 2 months of this quarter, pushing the borrowing rates to over $1 trillion in 90 days.
Sure, just seems like something's getting ready to happen here pretty soon, doesn't it, Joe? It's just, this is not a sustainable situation. And of course, with all their magic tricks, they can push this thing for a while. But you're talking, what 2024? If nothing happens, how many trillions of dollars will we add just in 2024, Joe? What are you saying, like 4? Is that where we're going to end next year? $4 trillion?
I don't want to see that number. I think it'll be something closer to 3. I'm trying to be positive here. It's going to be very much. I'll take a page out of Jay Powell's book. It'll be very much data driven, right? How hard is the landing going to be? Because there's going to be no soft landing. So get your heads out of your backside.
You're talking more than 10%. More than 10%.
Yeah.
We're going to add more than 10% of the entire national debt onto the debt next year. More than 10%.
It'll be close. It'll be close.
Incredible. 10%.
Yeah. And
that's
and let me just tell you, I gave you a bad number because I said $250 billion. My bad. An additional $274 billion. So we thought, according to the Treasury 31 days ago, that they needed to borrow $733 billion, which, I know I went to public school, so I got to use my calculator. That would be almost $3 trillion. Well, they said, we were off. And look how bad they missed it. $733 billion. They came out and said, well, we need to borrow another $274 billion. Jason, they missed it by like a third. I mean, they weren't even in the ballpark.
Yeah, $4 trillion is not out of the question, depending on what happens next year, right? But it could be more than that for all we know. Sometimes that's when the hyperinflation, that's what happens. Things just start moving, right, Joe? Out of control.
Yeah. $1 trillion, over $1 trillion every 90 days. Don't worry. How bad can this really end? It'll be fine. We'll be right back. (800-951-0592). Joe and Jason here on the first day of August. News out of the Treasury that the coffers are bare. And think, we were just at, $31.4 trillion during the debt ceiling. We're now getting ready to breach $33 trillion. The Treasury now, and again, we have no idea about fourth quarter yet. But let's just assume, I don't know why we would assume this, but let's just do it anyway for fun, that the number that they gave for the fourth quarter is accurate. Okay? That means we will be well above $34 trillion before the end of the year. My fear is that number is inaccurate and that they're going to do exactly what they did last night and say, oh, by the way, we need to add another 200 to 300 or 274 billion. Jason, we could be, instead of 34 trillion, we could be closer to 35 trillion if this trend continues. And everybody better look out. We've been warning you. I've had my son come on and warn you about rates are going higher whether we like it or not. We've got the Dow down across the board right now. I think it'll get worse. We'll see. It's early yet, but this could be one of these bigger sell-off days. But it's early, right? Anything could happen. The 10-year note at 4.05, so right near the highest in over 22 years. And I got news for everybody. By what they said today, I anticipate it going significantly higher. The Japanese yen rising big again. Now, this is Japan has already tried to let rates go higher. That should give the yen strength. It doesn't seem to be working. Is this problem going to come back? We had the problem. Remember, the yen blew up to 150, and people were like, hey, it may go to 200. I have a feeling a lot of different factors are going to come home to roost here before this is all said and done. And this whole fallacy of soft landing is going to blow up in everybody's face. Gold's down 30. And I'm telling you right now, buy every ounce you can. Silver's down 70 cents at $24.30. We're going to have a great silver special coming up for you as well. But listen, you may be like, hey, you know what? couple of banks got shut down. Well, one got taken over. One got shut down. Don't worry. Don't worry. Right? Because the higher the rates go, the worse they're going to be. You may want to be a little more diversified than you thought you needed to be. And that's where our friends at Y-Refi come in. Not correlated to the stock market. Doesn't care about interest rates. Up to 10.25% fixed rates of return. It's fixed. What does that mean? Well, that means you get the same number every single month. It doesn't change. That's what it means. And I'm going to tell you right now, I think that may be a very, very appealing thing here very, very quickly. You do need $50,000 or more to invest. That's kind of the caveat there. You can use your existing IRA or 401k for some of you. Your IRAs, absolutely you can do. Hey, if you got too much money in a bank account, what a great way to do it. You're going to get way better returns than you are at the bank, right? Hey, you want to just do it for a year? Fine, they'll give you 6.25%. That's still better than any bank's going to give you. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24. Just tell them that Joe and Jason sent you. I got to tell you, Jason, this was a much bigger number, the $274 billion of additional borrowing going to be needed by the Treasury than anybody expected, me included. And it's a culmination, right, where the checkbook isn't where it needs to be. Right, like today, starting today, out goes Social Security checks, right, for the next 10 days. Well, there's at least 100 billion, probably 120, 130 billion leaving the checkbook, and it was already at a low level. And Jason, this is one of these things where the other side of it has to be tax receipts. They're just not there. They must be coming in significantly lower. I know going into this quarter, tax receipts were down about 9%. On top of borrowing was up about 12%. I mean, you do the math. It's pretty simple.
Yeah, and you said, rate hikes might still be coming, and that's going to be a huge problem, but it's a huge problem if the rates just stay the same. If the rates just stay the same, this is a massive problem for the situation that you've mapped out. So whether the rates go up substantially here in the next couple of meetings or not, it's just, they've been in the catch-22 situation, the Fed has been, as far as what to do about this mess. And I think there's some sort of a plan leading into whatever's going to happen later this year, next year, as far as the markets showing this recession or this depression that we're headed for. And I think they know what they're going to do, Joe. And we always go back to the plan, which is, hey, there's going to be in some form I'd say a worldwide digital currency. I don't think it'll just be a Fed coin. I think it'll be something much more encompassing, and they're going to make people beg for it. They're going to make people. This is going to be the best thing ever, Joe. This next economic emergency is going to be severe, and I think it's going to be long and drawn out. It's going to be a slow, crushing recession. Who knows how many quarters? This could be a recession that has multiple years behind it, Joe, for all we know. How are they actually going to fix it? How long is it going to take to get people to adopt a whole another system or whatever their supposed fix is going to be? How much damage is going to be done that people are going to try to find so-called normalcy after it's all over with, right? It's no questions can really be answered. This is something we've never seen before. It's a combination of all the other economic crises all in one package, Joe.
Yeah, this is the largest borrowing in a single quarter since we'll call it the first COVID quarter, right, when they shut everything down. But let me give you some more context here. It's not a good picture. $1.01 trillion for this quarter. Right now, fourth quarter is sitting at $852 billion. That is the plan anyway. $852 billion. My guess is there's going to be an increase to that number. But let's just say there isn't. That puts the 6-month borrowing at $1.862 trillion. You multiply that times 2, right? So a full year, Jason, that would break the record for the national debt, $3.7 trillion. I'm hoping that isn't the case, but let me tell you some things that happened in here because there's a lot to understand. The Treasury wanted their cash balance to be about $600 billion. That's what they like to have in their checkbook. And that just makes sense because the government spends a lot of money, right? Spends a lot of money. Well, they said that's no longer sufficient. And they added another $50 billion to that number. But then they're going to add another $50 billion in the next quarter. And the reason for that is because what they're laying out is increasing dramatically, right? The interest on the debt, Jason, is starting to really have an effect on the checkbook of the Treasury. They have to have more money in the checking account because the checks they're writing are getting a lot bigger, a lot faster.
Because America has never defaulted on its debt payments, right, Joe? That's the most important thing for the Treasury. So we will never default on our payments. And how are they going to avoid it? Because if that's going to be the biggest thing for the Treasury and the U.S. government to avoid losing the full faith and credit of the dollar, then what's going to be that scheme, Joe? Because at some point, the bills are too much. That's what bankruptcy is. Bankruptcy is the bills are too much. It's unpayable. So if it's not unpayable, Joe, how are they going to make it not unpayable? What scheme are they going to hatch, right?
Yeah, and here's the thing. The last time the government was issuing this type of debt, it was quantitative easing. Yep. The Federal Reserve was buying it all. But now you're telling me we got to ramp up the borrowing, and on top of it, the Fed is allegedly supposed to be selling another $60 billion of treasuries every month. How high are these rates going to go? And this is going to be the thing, because there's only one way to get demand that you need, and it looks like we need a record levels of demand. That's what we need right now. Record levels of demand. Why? Because we don't have the Fed buying. The only way you get that, Jason, is higher rates. It's the only way. And you sit there and you tell me this economy is going to be able to take rates that go, mortgages at 10%, right? I mean, this is kind of what we're talking about right now is that's the only way this works, right? The 10-year notes got to have higher rates. Why was gold down today? This is why. Because everyone figured, oh, crap. Rates really are. Maybe Double and Jason aren't that dumb. We told you this a month ago. We started telling you all of July what August was going to bring. But I promise you, this is actually going to lead. This is why you don't think J.P. Morgan knew this yesterday when they increased their gold forecast? Right? They knew, hey, gold's going to be record highs in 2024. Why? Yeah, because the government's in trouble. Right? The borrowing numbers are getting ridiculous. We're starting to choke on all of the free money. We borrowed free money for 15 years. Right? The debt was, 5 or 6 trillion before the whole thing collapsed. We've ran it up to 40. I know we're talking about, hey, we got to be 34. You got to remember, the Fed's got $8 trillion plus on their balance sheet.
Well, and Joe, you said the Fed is not buying the debt, but if they're trying to kick the can down the road, I guess they could secretly buy the debt. They just don't show it on their sheets. They said that they bailed us out $5 trillion, but we find out years later it was $29 trillion. So, there are tricks they can play. They're not always up and up on what they're actually doing. So maybe the Fed's buying it.
We'll see how long quantitative tightening lasts. I'll just say this: quantitative tightening is now on the clock. Now, let's talk about something good out of this, because I don't want to be totally negative. This will actually help the Fed potentially be able to stop raising rates if rates just start going higher on their own. You got to remember, listen, the Fed's at 5.5%. The 10-year note should be at least 7.5% and probably closer to 8% if this was a healthy economy. And here we are, we're freaking out with a 10-year note at 4.05. So, Jason, there could be some help here in the and I'll take Bubba Horwitz, who says, hey, Fed funds rate's going to 6%. We may be able to stay under that if all of a sudden the 10-year note starts yielding 5, 6, 7%, right? I mean, there is a little bit of a silver light. Of course, it's still all bad for the government. The higher that 10-year note yield goes, the worse the debt gets. This is the terrible, terrible cycle that we're in now, where the interest on the debt, Jason, it's skyrocketing. We already know in 12 months, if you go from September to August, we'll have already spent over $1 trillion in just interest on the debt, and now that number is getting ready to spike. Patriot Radio News Hour. Come back if you can take it. (800) 951-0592. Patriot Radio News Hour. Joe and Jason on the first day of August. Been talking about the Treasury announcing a massive increase in the amount of debt they need to raise. So this is two things that it means. The interest skyrocketing, tax receipts declining. It's a bad formula, isn't it? On top of that, tomorrow, the Treasury is expected to announce how they're going to fund the new $274 billion. And it's going to be, this is me telling you, all in long dated. I don't think there will be any increase in 3 month, 6 month, 9 month, 1 year, right? It'll be 2 year, 10 year, 20 year, 30 year. This is going to drive rates higher. This is why you're seeing the reaction today on Wall Street. It is a massive buying opportunity. Why do I say that? Because this is the illusion of dollar strength, right? Because, well, yields rising, dollar strength. That makes it, computers say, oh, yeah, dollar stronger. We know it's not, right? Because it's not stronger for a good reason, right? This is a horrible reason, right? This is the worst reason possible. And I think that the markets are going to react very swiftly to this. Yesterday, we had $20 gold pieces on sale at $2,195. That's gone. $2,175 today. So save another $20. Silver. This is the best deal on silver that we have on the board today. Rolls of silver dimes. I'm going to tell you, you don't think a digital currency is coming? Are you kidding me? We're going to borrow 1.85, and we got to wait for the fourth. We may borrow $2 trillion in the second half of this year, and they're still trying to tell you soft landing. Will you please wake up? A digital currency is coming, and wait till we talk about social credit scores, because the banks are already working on it. You better have some divisible material. You better have some barterable material, and I'm going to help you do it today. Rolls of silver dimes at $100. You heard me right. Only $100 for 50 silver dimes. But I'm going to do you one better. If you buy 25 rolls, that's not even a quarter. What is that, an eighth of a bag?
Eighth of a bag, yep.
An eighth of a bag. Here's what we're going to do. Now, 25 rolls, 25 times 100, that's $2,500. I'm going to throw the 25th roll in there. So if you buy 25 rolls, you only need to pay for 24. So every 25th roll you buy, you save $100. So you buy 25 rolls, you pay $2,400. You want to buy 50 rolls. Instead of paying $5,000, you'll pay $4,800, right? You get the idea. Every 25th roll, I'll throw it in there for you at 800-951-0592 because there is a big story breaking about what the banks have been up to. And, Jason, it's not good because they're now already, and again, we've been seeing a lot where these corporations have been doing the government's dirty work, like the COVID vaccines and all that other stuff. Well, apparently, the banks now are already laying the foundation for a social credit score. Why would they be laying the foundation for that unless they already knew the digital currency was coming?
Yeah, I saw a beta test cryptocurrency. I forget which country it was being tried out in. One of the things we're worried about it with cryptocurrencies is somebody saying that they're you, and then of course using your account, right? So how, when you're doing online purchases, Joe, do you keep security and privacy? They actually believe keeping your privacy and security is getting an eye scan attached to your digital account, and they've a new coin called WorldCoin was released, and you go and have your eye scanned, so everyone knows it's you when you're making your purchases, and people lined up for this thing. And I don't think it'll be a serious contender for a digital currency, but it sure sheds another level of what, I don't think anyone really for sure knows where this thing's going to spin into once they unleash it, and who's going to actually be the gatekeeper. What's it actually going to be? Is it going to be an IMF world type of cryptocurrency, or are we going to have individual countries with their individual coins? But I think for a world system, Joey, they have to have a world money. I think that's what they want. They don't want us to deal in just dollars. If we need to do business with China, we need to be able to have a coin that can move quickly between the countries, right? So it's coming. It's coming. I don't know how long it'll take to actually have it in full bloom, but it's going to be here. And when you talk about the debt in this country spiraling out of control, just adding and adding and adding and adding, sure seems like someone's lit the fuse to some economic bomb that's going to go off, Joe.
Well, and again, I'm going to tell you, it's already happening. You saw it in the UK with the guy that was running for prime minister. The bank banned him because they didn't like what he was saying. We saw it with the Canadian truckers, right, and the banks doing that. We saw it. Remember when the FBI testified? Oh, yeah, Bank of America just handed us all the transactions around Washington, D.C., so it's already happening, but J.P. Morgan said that what we are seeing, we are already seeing this happen right here in the United States. J.P. Morgan has been canceling people's bank accounts. The number continues to grow. People, remember, we did that story too. People are just waking up. Oh, your account's been closed. Well, what did I do? Oh, well, it's under review. We'll get back to you in 20 days. And then we'll let you know whether or not you can have your money again. And Jason, this is something where people need to wake up. This is a huge day today. I've never seen a day when the Treasury just out of the blue says, oh, by the way, we're a third way into the quarter. We miscalculated. We need to borrow $1 trillion, not $725 billion. We need to borrow $1 trillion. By the way, we need to borrow $850 billion next quarter. And hopefully we don't have to make another announcement to say, oops, that was wrong. We need to borrow another $1 trillion. 800-951-0592. Soft landing my ass. It ain't happening. Get yourself protected. We'll be right back. (800-951-0592). Joe and Jason Social credit scores, they're already here. I keep saying they're coming. They're here. Don't you get it? It starts slowly at first. J.P. Morgan being accused of pressuring their credit card provider to go after companies who don't use their banks and essentially having their credit card provider cut off people that don't even bank at J.P. Morgan. So a lot of places, right, hey, if you can't take credit cards, right, you're out of business. And here's the funny thing. When you get booted by one credit card, J.P. Morgan, they own their own, right, B of A, Wells, all of those guys. What do you think happens when you go to that bank and say, hey, I want my credit card. Hey, will you take my credit cards? They're going to look. Oh, well, J.P. Morgan kicked you out. Well, we're not touching it, right? Right? We're not touching. We're not opening ourselves up for that. You don't want to believe it? How about this? On March 23rd of this year, 14 states wrote a letter to J.P. Morgan and their CEO, Jamie Dimon, expressing concern that the bank was engaged in what appeared to be politically motivated debanking of certain industries, individuals, or groups. On May 2nd of this year, 19 state attorney generals wrote a letter to Jamie Dimon. It is clear that J.P. Morgan Chase has persistently discriminated against certain customers due to their religious or political affiliations. And it goes on. This is social credit. This is what it is. We don't like what you think. We don't like what you stand for. Therefore, we're going to kick you out. And Jason, this is exactly what is coming down the pipe, especially with the digital currency, because at that point they can track everything. Right? Well, you made a donation to Donald Trump. Oh, yeah, your account is frozen. I mean, that's what happened to the Canadian truckers. Same thing happened.
It's a form of manipulation for sure, and we saw this during COVID, but you start with giving some free, cool thing out to people that everyone thinks they need. And then when the first burst of people don't adopt it, then the next group of people is, well, how can we coerce you into it by offering you something? And then once that doesn't work out, then the remaining people that aren't inside of whatever it is they're pushing on you, they say, oh, well, we're gonna take things away from you. We're gonna make your life harder. You're gonna be working outside of society. Life is not going to be good for you because you chose against this. And that's what you're talking about, Joe, with this is at some point in the future, your social credit score will cause you to have a life that's less than others. Yep. Those that play ball will have, if you just play ball, you're good. If you don't, you get punished.
They're discriminating by saying they don't discriminate, and then, right? I mean, hey, no, we don't discriminate, but we're going to discriminate against you. This is exactly what is going on. The state attorney generals, Chase must stop this behavior and align its business practice with the anti-discrimination policies that Chase proclaims. Now the new worry, because they're not done. This is just starting. There is every reason to believe that the current discriminating practices in banking could soon expand to personal CO2 emissions and to gun purchases. And Jay said, I absolutely believe both of those things are most likely to happen.
That's correct. And it may not happen to everybody all at once or happen right now at this particular moment. It's in the works. And then, China's a good testing ground for this. They're already using this stuff there. They're already having, like you said, Joe, the bank accounts shut down because of behaviors or activities. Groups of people having their accounts shut off because they're associated with a certain group. Think about that, Joe. You're associated with a group, meaning my sister-in-law, I talked to her, and she's a big whatever. We'll go with your Trump thing. She's a big Trump fan. and I have accounts, and I do Facebook with her. Well, in the future, it could be you're associating with somebody that's been shut off, and all the associates of those people are shut off. And what that does is that creates pressure of those that aren't in agreement completely with their friends and family members to say, look, I can't even contact you anymore. I can't be associated with you because I got shut off because of you. But that's not what's going to happen. That you didn't get shut off because you're a friend that like Trump. You got shut off because they want you, and they want your non-player playing friends in the system. They want everyone to comply. So what better yet than to create divisions in between friends and families, Joe? And they're going to have that ability with the digital currency. Absolutely.
Well, let me tell you right now, absolutely. We will change the way you think by you no longer you want to be able to bank again, disassociate, right?
Yep.
Unfriend, unfriend. You think I'm lying? J.P. Morgan, Bank of America, Citi, Wells Fargo. Okay, so, right, the big guys have all stated that the process of phasing out CO2 emissions from their entire business model has already started, including lending and banking services. It's already started, you guys. This will take a while to complete, but again, with the digital currency, it speeds up the process, doesn't it? And again, this is why you need to have some gold and silver put away. You need to have a means to be able to provide for yourself, because this banking thing, this is far from over. Thousands of them are going away. There's only going to be a handful of them left. U.S. silver dime, $100 a roll. Every 25th roll, I'll just give it to you. 800-951-0592. Jason and I coming right back with the final segment. $800-951-0592. $20 gold pieces, $2,175. Silver dimes. This is just a spectacular opportunity. They're $100 a roll. I mean, just $100 for a roll of silver dimes. I mean, that's like less than $28 an ounce. What? Yeah, less than $28 an ounce. If you buy 25 rolls, every 25th roll you buy, I'll give you that 25th roll for free. Well, that's an extra, 3.57 ounces of silver. When you factor that in, Jason, you're talking about buying silver for under $27 to the ounce. I mean, that's so close to spot that's something we haven't seen in the silver markets in a long time. And now I'm sitting there just writing, hey, by the way, just last week, J.P. Morgan started debanking doctors that are out there telling you that there's issues with the COVID-19 vaccine. Right? I mean, what more proof do you guys need? Take the time, be prepared, because you don't know what's coming. Think about the news today. The debt all of a sudden skyrocketing. Who's buying it? There's only one way you can sell that much debt. Rates have to go up. The economy, the soft landing, it's not going to happen. It was never going to happen. But in any event, that was bad enough. Right now we start talking about, wait a minute. The banks, they're up to a lot more than we ever thought, and it's all of the major banks. And guess what they've told us? Remember what Janet Yellen said, right? These little banks, they need to go away. We got way too many. I mean, we got 4,000, 4,500 banks. I mean, Europe's only got 300. Jason, the only place you're going to be able to bank are going to be the banks that are left. And they're going to tell you what you can and cannot do.
Yeah, buy silver dimes while you can still do it without having to do an eye scan. Because I'm telling you, this thing I saw, Joe, This is absolutely right in the wheelhouse. You know, when you have to do what you have to do for the last 20 years to get on an airplane, an eye scan to make purchases doesn't seem far-fetched anymore, Joe.
Great point. How about going to Europe? You want to fly to Europe? Yeah. Not unless you apply for a visa, you're not. Yeah, that's coming down the pipe, right? All of this stuff. Freedoms are going away. And I believe me, who knows when it's going to happen to you and the rules that these banks set in place. I don't even know how to explain it any clearer than this. This is something where, unfortunately, this is the direction the pendulum is swinging, Jason. It's going to overswing. I think eventually it'll come back, but probably not. We probably won't be alive to see it, though, Jason. That's going to be the problem.
Well, it depends on how fast they have to move this thing into a position that they think they need to, Joe. I mean, you're right. If there's a blowback, people actually figure this stuff out. All this stuff could be stopped or changed or made better. But I can't sit around waiting in good faith for the rest of humanity to want to be freer. I see the writing on the wall that people love to be subjugated. They like to just do what mom and dad government tells them to do. And gold and silver is one of those things that kind of keeps you a little bit separate from that situation, Joe.
I'll just say this. The clock got moved up with the announcement from the Treasury today. It's coming whether we like it or not. Patriot Radio News Hour. God bless everybody. Jason and I are coming right back with the Half Empty Cup.